Hi everyone, welcome to Ask a Property Manager episode number 52. Today is December 23rd, 2020, and I'm coming to you live from Studio 2.0 here at Own Buffalo Inc. Thank you so much for tuning into our final episode of 2020. We're going to be talking about a whole bunch of stuff here today. I'm Andrew Schultz, principal broker of Own Buffalo Inc. On today's show, we're going to be discussing meth damaged homes. We're also going to be talking about builders taking an interest in building new multifamily properties. And of course, we're going to be answering some questions from housing providers around the country and so much more. Before we jump into all that, we're going to plug our social media. New episodes of Ask a Property Manager come out every Wednesday morning, 10 a.m. Eastern. Those are live on our Facebook page, facebook.com/Buffalo Foreclosed Homes. You will not find a new episode next week, obviously. I just said that we're going to be taking next week off, but we'll be back in January with all new episodes. You can catch episodes the same day that they go live on Facebook. You can find them on YouTube as well, over at youtube.com/ownbuffalo. You can grab actually, our Instagram page is unique because we post things there that we don't necessarily post on our Facebook or YouTube. More photo content and things like that obviously find its way over to our Instagram versus our Facebook and our YouTube pages. And then last but not least, don't forget about the free 30-minute phone consultations with me over at ownbuffalo.com. Those are free through the end of this year. There's still a couple of time slots remaining. If you're interested, feel free to jump in and take advantage of that opportunity. Let's see, the Rent Prep for Landlords podcast, new episode will be out next Thursday, December 31st. We actually had 2 episodes in December. We'll be back to our normal every week schedule on that in the month of January as well. So the next episode of the Rent Prep for Landlords podcast drops next Thursday, the December 31st. We're going to be taking a look at rent trends across the country, where rents are going up, where rents are going down. We're also going to be talking about how to manage mailboxes in a shared rental and tenants who refuse to allow you to do repairs and so much more. New episodes of the podcast drop on Thursday mornings over at rentprep.com/podcast or anywhere that podcasts are heard. All right, so we are going to jump in first thing this morning with some news articles. Let me jump to desktop here. Our first article of the day, this one comes to us via Realtor.com. New home construction charges on as builders shift focus to multifamily projects. We're going to enlarge that a little bit and scroll down. U.S. home builders started construction on homes at a seasonally adjusted annual rate of 1.55 million in November, representing a 1.2% increase from the previous month's figure, the U.S. Census Bureau reported on Thursday. Comparing with last year, housing starts were up nearly 13%, which is pretty substantial given the current situation with the pandemic. The pace of building permits was the highest in 14 years. Permitting for new homes occurred at a seasonally adjusted annual rate of 1.64 million, up 6.2 from October and 8.5 from a year ago. Economists polled by MarketWatch had expected housing starts to occur at a pace of 1.54 million and building permits to come in at 1.57 million. A surge in the multifamily sector, which includes apartment buildings and condos, drove the increase in both housing starts and building permits. Multifamily starts were up 8% versus 0.4% for single-family homes. The number of permits issued for buildings with 5 or more units, which is what we would consider an apartment building, 5 or more units rose nearly 23% between October and November, compared with a 1.3% uptick for single-family structures. New home construction activity didn't grow evenly across all parts of the country. Housing starts surged roughly 59% in the Northeast, driven by the multifamily boom, but fell nearly 5% in the Midwest and 6% in the South. That actually surprises me a little bit. Midwest and South both experienced slowdowns in new construction of single-family homes. America's building boom is continuing for now, and that's good news for prospective home buyers. The severe shortage of existing homes for sale has pushed prices higher. As a result, the new home segment of the market holds renewed importance. New home construction stands out as a clear solution to the rising challenge of affordability, especially as housing demand is expected to continue to grow, said Realtor.com senior economist George Ratau. However, without a significant supply of new construction, many would-be buyers will be forced to sit on the sidelines due to record-high home prices. He did signal one concern for the market. The pace at which builders completing their projects did slow in November. The number of completions fell nearly 1% for single-family homes and 35% for multifamily. The momentum for single-family starts and completions is slowing, he says. Single-family housing continues to be well supported by strong demand and low mortgage rates. Builders are hyper-optimistic. Joel Neroff, president and chief economist at Neroff Economics, wrote in a research note, whether that's irrational or not, we shall see. So this article, I picked this one out because I thought it was interesting that we're starting to see developers show interest in multifamily again. There hasn't really been a ton of multifamily starts in, at least in the Western New York region. There have been some bigger projects, but we're not seeing anything in like the small multis is what I call them, the 5 to 20 units. There's not really much in the way of new build construction, at least that I've seen in our area, in that small multi. Everything that I'm seeing, like the project on Sweet Home in Amherst, which is geared towards university students, I think that's like 200 and some odd units, but it's all geared towards student housing. Some of the other things that we've been seeing, we have seen, there was a project by Buffalo State a couple years back. I'm not sure what the current status of that is. I know it went through a foreclosure proceeding and everything, but what we're seeing is larger multis being built, at least here in the Western New York region, and not so many smaller multis, which I think that's kind of a key to unlocking the next stage of development in Western New York. Is someone has to step up and build small multis, because there are a lot of people right now who are in singles and duplexes. They may have a portfolio of 10 duplexes, for instance, but they can't find a like conversion in a small apartment building. So basically they're stuck. They can't move up. They have to either continue buying small duplexes or singles or tries, quads, whatever, but they can't necessarily move up into what the mid-size multifamilies would be, the 5 to 20 unit buildings, just because there's no inventory there. So it's interesting to see that there is a demand for new multifamily. The one thing this article didn't really talk about was how many units are in these multifamily starts that they are talking about here. That would have been a little bit more data that I would have loved. Unfortunately, we don't have it, so it is what it is. This next article comes to us via Buffalo Business First. This one's got a little bit more of a local spin. Homeowners outnumber renters in all Western New York communities except for Buffalo and Jamestown. If you live in Western New York, it's likely that you own rather than rent your home. Homeowners outnumbered renters in almost every in almost every community across the 8-county region, according to a Buffalo Business First analysis of newly released federal data. The study focused on all 110 Western New York cities and towns that contain at least 1,000 housing units, a term that encompasses freestanding houses, duplexes, apartments, condos, and trailers. Homeowners hold a statistical edge in 108 of those communities. Jamestown and Buffalo are the only places where more people rent than own. There are 683,500 units within the 110 cities and towns. Roughly 79,000 are vacant, while 604,000 are occupied, based on data from the 5-year version of the U.S. Census Bureau's 2019 American Community Survey, released in mid-December. Homeowners live in 402,000 of the occupied units, accounting for 66.5% of the regional total. Renters live in the other 33.5%. The highest number of rates of home ownership are found in rural towns, not affluent suburbs. Wales sets the regional pace with 94.8% of its housing units being occupied by their owners. Neighboring Marilla and Bennington come in next in the regional standings with respective ownership rates of 93.6 and 92.7. The balance is virtually 50-50 in one of the cities at the bottom of the list. Renters barely outnumber homeowners in Jamestown, 50.3 to 49.7. The gap is much larger in Buffalo, where 3/5 or 59.3% of all occupied housing units are rented, far ahead of the 2/5 that are owned. Statistical breakdowns for the study's top 50 and bottom 10 cities can be shown below. They're ranked by their home ownership rates. So we'll look at the top number one here, Wales. We'd actually heard about this in the article. Their home ownership share is a whopping 94.8%. Not a lot of renters in Wales, and that was what I would consider a suburb of the Buffalo region. So we're going to scroll all the way down to the bottom of the list because that's where the heaviest concentration of renters is. There we go. And obviously you start with Buffalo, where you see that the renters actually outnumber homeowners. Jamestown, which was talked about, renters share 50%. Salamanca, which is southern tier area, again, renters share 48.4%, nearly even with homeowners. Batavia in Genesee County, 48.4%. Olean in Cattaraugus County, 48.3%. Albion, which is out in Orleans County, right next to my hometown of Medina, 46.7%. Medina not on the list, actually. They were somewhere in that middle part of the group that got cut off, unfortunately, so I don't have the data for my hometown. Lockport, city of Lockport, where we actually have a fair number of rentals, 46.2% renter share. So you can see that there are several different areas here in Western New York that are heavy renter, 50-50 renter, 60-40, or 40-60 renter, somewhere in that range. Basically, the bottom, when I say bottom 10%, the article is referencing bottom 10% as being the highest percentage of renters and the lowest percentage of homeowners. So that's what they're referring to there. But you can see that it is predominantly going to be city centers and things like that throughout the Western New York region. Actually, all of these with the exception of Albion. Actually, Albion's the county seat. It's a small town, but it's a county seat. Yeah, it's all going to be areas where basically people have access to essential services. People are looking for easy access to things like groceries and doctors and shopping and stuff like that. That tends to be a draw for tenants, as being close to everything that they're looking for, versus homeowners who might have the ability to travel more of a distance or something along those lines, or would prefer to live in the country and commute into work, something along those lines. It's just a difference in lifestyle choice in that instance, I would think. So kind of an interesting look at where the renters are living here in the Western New York region. At least I thought it was an interesting take on what's going on here in Western New York. Where are the renters at, and in what capacity, what percentages are they living in the area? So pretty neat information. We'll jump over to a little bit of humor here today. Both of these were pulled. Actually, this one was pulled from the Rent Prep for Landlords Facebook group. I got a chuckle out of this one. I decided to throw it in this week's episode. But really what I wanted to show you guys is these two. These were pulled from, I believe, Rob, I'm going to mispronounce Rob's last name, Rob Giuseppetti. Sorry, Rob. I hope you're not watching and listening to me butcher your name. If you're looking for a home inspection in Western New York, call Rob over at Pillar to Post. We'll give him a plug because I just butchered his last name. And Rob, again, I apologize. But I pulled these off of Rob's Facebook page. He's always got crazy images like this from different stuff that gets shared by home inspectors and things like that. Obviously, on the right side, you have what is possibly one of the most structurally sound cast iron sewer mains that I've ever seen. We have a lot of cast iron sewer mains here in the city of Buffalo. They don't all look quite that bad, thankfully. But that is one of those things that over time, those cast iron sewers do degrade. And then obviously on the left, you have one of the best drywall jobs known to man. I actually looked at a potential flip property earlier this year in Western New York here, in our region here in Western New York. And whoever had done the drywall did a job about like that. It seriously looked like they took softball-sized wads of drywall mud and just kind of threw it at the wall, and then smeared it. I gotta switch back to, there we go. It basically looked like they took softball-sized wads of mud and threw it at the drywall, and then just kind of smeared. I don't think they used a tool at all. I think they just kind of smeared it down the wall with their hand and figured that it was basically every stitch of drywall would have had to come out of this place and be redone from scratch. It was quite the property. Somebody else ended up bidding and getting that one. I did bid that one, but I got outbid, unfortunately. Somebody else ended up winning on that one. So way she goes, I guess. So let's jump into our questions from housing providers around the country. We're going to start with this one on meth damaged homes. This is an interesting topic. So let's jump right in here. Meth damaged homes. Has anyone ever had their home tested for meth? I just heard that 5 years ago there was a drug bust and supposedly there was a meth lab in the basement. So meth contamination is a very, very, very serious issue. I feel fortunate that I've never had to deal with one of these cleanup situations myself, because it's a real process. So the thing with meth is that both the smoking of meth and the manufacture of meth create contamination. So it doesn't matter if you have someone that's actively cooking it or if they're just smoking it in a rental or something like that, it's going to cause contamination. Keep in mind that the people that are manufacturing this product are not scientists. They're mixing this stuff in 2-liter bottles. They're mixing this stuff in coffee pots, things of that nature. We're not talking about Bunsen burners and beakers. This is not Breaking Bad. In about 95% of circumstances, Walter White is not coming to these guys' rescue. It's both the smoking and the manufacture can cause contamination. So these guys are not scientists. They're creating a hazmat situation inside of a rental property, and it has to be dealt with properly. Or you can really get sick from this if it's not dealt with properly. So the first thing you're obviously going to need to do is test to determine, has meth been used in the property or was meth manufactured here? If it's, as a result of a manufacturing operation, chances are you're going to find out from the police, unless you have a real good thumb on your property and know what's going on with the tenants. You might find out from the police when they boot in the door, before you have an opportunity to actually discover it at the property. It's an incredibly volatile solution as well. So if you do uncover an active situation, if you will, that's not something that you should be trying to clean up or handle yourself. You need to contact authorities right away and let them bring in a hazardous materials crew to take care of that situation. So anyway, after you have the property tested, you're going to have to do substantial demo of whatever the contaminated surfaces may be. So we're talking drywall, we're talking carpeting, we're talking basically any sort of a surface that is contaminated is going to have to be removed from the property and disposed of properly. There are specific ways that you have to dispose of this material. Any sort of remediation specialist will take care of all that for you. It has to be taken to the dump and treated in a specific fashion and things like that. And then obviously once all that's done, you can start the rebuild process. So there's a lot that goes into this. It's definitely going to be a situation where you're going to be making an insurance claim for sure. I don't think that there are a lot of insurance companies that are excluding meth as an exclusion on your policy. As a matter of fact, I don't know if they can. I don't know enough about insurance to be able to say adequately on that. But it would definitely be something that you're going to be running through your insurance. This is not something that you're going to want to have to pay for out of pocket. Keep in mind that even after all of this is said and done, you may still have to disclose that the property had been used, or that meth had been used at the property, even after going through all the cleanup and everything else. That's something where you're going to have to check your state law and find out what are the laws regarding disclosure of meth usage. Do you still have to disclose if everything has been remediated? You may have to provide records showing that things are remediated, whatever the case may be. But you may still have to disclose that. Check your state laws before you get in too much trouble with something like that, and make sure that you're doing the right thing. Coin op laundry theft. Looking for advice. I have a coined laundry in one of my buildings. A few weeks ago, I went to empty the quarters and noticed that someone tried to break into it. They broke into the wrong part. When I emptied the quarters, it did seem to be less than usual, but I didn't think much of it. Today I got a message from the convenience store a few buildings down saying that one of my tenants has been in there a lot recently with a lot of quarters, looking to have them cashed in for bills. What should I do about this? She's the only proof I have, the convenience store clerk, I guess. I can get cameras, but I think I'll need to get internet, and I don't know how I can hide the camera. Is this my only option to try to catch them in the act? So the first thing I would do would be file a police report based on the previous incident. You can name a suspect, possibly. The police may interview the suspect, they may not, given that it's, you're removed from the actual theft situation. But it doesn't hurt to at least file the report so that there's something out there acknowledging that this is a concern. Next thing I would do would be install the camera, to be honest with you. You mentioned making it a hidden camera. I wouldn't. I would make it very much out in the open, because I think that that's going to go the furthest to deter this from continuing to happen. Check your state laws, obviously, to find out what you need to disclose with regards to putting up a camera. If you need to put up a sign that says, video surveillance present in this area or whatever, just check your state laws to make sure you're doing whatever you need to do that way. But I wouldn't hide the camera. I would put it right out in the open, such that everybody that walks into the laundry room understands, hey, we've had an issue here and now we're addressing the issue. And honestly, I don't think that you'll catch them in the act if you put the camera out in the open, but realistically speaking, I think it'll probably stop them, or at least give second thought before they decide that they want to continue with that theft a second or a third time. So in terms of catching somebody in the act, what's the point? I mean, realistically speaking, If you can deter the issue from happening again, I think that's probably the best you're going to hope for here. You might catch them in the act. They might be willing to go ahead and commit another theft, even with a camera there, thinking that it's a fake camera or thinking they won't get caught or whatever. That's up to you. But that's how I would handle it. I would just go ahead and install a camera. I wouldn't be covert about it. I would put it right out in the open and make it known that it's on display and that that's an issue. Buying a remodeled home. I'm buying a house which was built in 1995 but remodeled in 2005. So the effective year built is 2005. The listing in the MLS said built year 2005, and the seller doesn't know what has been done in 2005 since he bought the house in 2013. Is there anything I should pay more attention to on this deal? Yeah, literally everything, because based on this, it sounds like somebody's lying. The reason I say that is because remodeling a home does not change the year that the home was built. You know, even if you add on an addition to the home, that doesn't change when the root portion of the home was built. So essentially you would have, and I know our tax records actually break it out in a lot of instances, you might have on a tax record, it'll say, you know, main house was built in 1975, for instance, okay? And then somebody decides that they want to put an addition on the back of it, a master bedroom and a big dining room or something like that. You would actually see that added on to the tax record here, and it would actually show that that structure was built in, say, 2005. So it doesn't change the year that the structure was built just because you remodel something or put an addition on it. It would still be originally built in this instance, 1995. So that being said, your best bet here is a thorough home inspection. If you're in the Western New York region, give Rob Giuseppetti a call. Second plug for Rob, second or third or fourth or fifth time I butchered his name. Sorry, Rob. Get a thorough home inspection. Have a licensed home inspector come in, check the house top to bottom, left to right, front to back, inside and outside. Go through the report with them and really understand what it is that you're buying. That's going to be your best line of defense in this set of circumstances. The other thing I would recommend doing would be call the municipal building department. If the remodel was done in 2005, chances are they'll have some permits. They may even have some drawings of what was done or some technical diagrams or something along those lines, depending on the township you live in and how long they keep records on archive. But they may actually have copies of permits and stuff like that from when the remodeling work was done, and they may be able to provide you with a little bit of insight as to what was done just based off of the records that they have. So that's something to consider as well. But definitely make sure that you're looking everything over thoroughly. It sounds to me, look, this could just be a simple error in an MLS listing, but it sounds like it's a little bit more than that to me. I would probably dig into it a little bit more and make sure that you are buying what you want to buy. Verifying a rental history. Hello, everyone. What documents would you ask for to verify rental history? Also, if you were renting a single-family home, would you consider applicants who've only rented apartments before, not single-family homes? I would love to hear some advice. The property's in Florida. Thank you in advance. I'm going to tackle the second part of that first. Would you rent a single-family home to someone who's only lived in apartments before? Yeah, I don't see any reason not to. It could be a situation where they're just in a position where they can move up in life, or they've had, you know, kids and now their one-bedroom or two-bedroom apartment doesn't work anymore. They need a whole house and they're just not ready to buy yet, or whatever the case may be. That's not really a red flag to me. As long as they qualify using our guidelines, that's really what I would be looking for in that set of circumstances. When somebody's looking to move up or move down in housing, it doesn't necessarily, you know, flag something for me. It's just sometimes people are moving up, sometimes people are moving down. People upsize and downsize all the time to fit their needs. So what documents would you ask for to verify rental history? Typically what we do for our verification is we call the previous landlord, usually the previous two landlords, and ask a series of questions. I'll show you our questionnaire in just a second. But if you wanted to get some sort of documentation to verify somebody lived in an address, my recommendations would be a utility bill, a pay stub would have an address on it, possibly their driver's license or ID card. If they've had that updated since they moved, that would have their current address on it. You could look at a bank statement and see that they've been making rent payments on a monthly basis or whatever. If somebody wanted to prove via bank statement, They could also prove via canceled check. If they have copies of the canceled checks, they can show the checks and when they were deposited by the landlord for the last year or whatever. But then finally, I would go and look at the landlord references. And before I even call a landlord reference, I do a couple of things. The first thing I do is I run the rental address through the tax records. And this is all public information. You can find that stuff online. Run it through the tax records and see what name comes back on the tax record. And does it match the name of the landlord that they have you calling? If not, that's a question. You know, is it somebody who's trying to give you a fake landlord reference? Is it somebody who's managing the rental property on behalf of somebody else? You know, what exactly is the situation there? It's a little bit of a red flag, but not necessarily a deal breaker for me. So then as far as the questions that we actually go through and ask, hopefully this is large enough on screen for you guys to see it, but I will read through them as well. When we actually talk to the landlord reference, we ask, when did the tenant rent the property? Do they still live in the property? Were they on a lease? Are you related to anyone living in the unit? That's a pretty important question that we ask, because a lot of times you'll have people that they might be renting from an aunt or an uncle, different last names, looks like it's a valid landlord reference, but it might not actually be arm's length. What was their monthly rent? Was it on time? Were they ever late? Did they ever bounce a check? Those are all pretty straightforward. Why did they move? Did they give proper notice? Did they keep their unit clean? Was the unit in a reasonable condition at move out? Was it damaged? Did they receive the deposit back? Did they have pets? If so, what kinds? That's a great question to ask. I love asking that question. And the nice thing about asking that question is sometimes you'll find out about a pet that somebody didn't disclose on their rental application. Were there any complaints from neighbors? Did you ever have to serve an eviction or other legal notice? I think that we've stopped asking that question now because of the way the compliance is working here in New York State. Did they pay their own utilities? Do you own the property or are you the manager? That's a good way to find out if the person, if you've got a mismatch on your tax record versus the name of the person you're calling, but they say that they're the owner of the property. Okay, you might be dealing with a fake landlord reference. Would you rent to them again? And then, of course, we give somebody the option of giving us their additional comments. I think it's worth mentioning that landlord references are becoming more and more difficult to obtain and more difficult to trust, because you will get landlords that have a bad tenant that will just say whatever it takes to get the tenant out of their unit. I think that that's going to become an increasingly more difficult issue as we move forward, especially with the number of people who are going to be moving and shifting as a result of the pandemic. I know that there are some landlords who just don't even do landlord references anymore. I haven't reached that point. I still think that there is some value to the landlord reference. I know that it's time intensive. I know that it's not always, you know, we're not always going to get information back. I'm just not at a point where I think that dropping landlord references from our screening criteria is where we're at yet. It might be something that we look at in 2021 as we move towards more objective criterias and things like that. I mean, look, let's jump back to the questions. There's definitely things on there that could be construed as opinion questions. And obviously, we don't want to make decisions based on opinion. So that's something that we'll probably be looking at in 2021. But it's worth noting that that's where we're at, you know? Like, it's one of those things that you have to consider when you're screening a tenant is how much do you trust the landlord reference? So that's where I would be at on verifying a rental history. Hopefully that helps you out a little bit. Hopefully the questions also gave you at least a little bit of an idea of some of the things that you could ask of a previous landlord if you decided that you wanted to do those landlord references. That pretty much wraps things up for this year of Ask a Property Manager. Thank you all so much for watching. I know I say that every week, but it really does mean a lot to be able to produce Ask a Property Manager on a weekly basis and try to get some more education out into the real estate world. It's basically a passion project. Like, we don't make any money off of Ask a Property Manager. It's not monetized, you know, like there's no ad revenue from this. This is purely a labor of love type situation. So thank you so much for watching this year. We really do appreciate it. We're going to be back again in 2021 with all new episodes, some new content, some more exciting things for you guys to take a look at. As I'm sure you can hear, my Ring doorbell is ringing in the background, so I'm going to actually end our episode today. Again, thank you all so much for watching. Happy holidays, Merry Christmas, and Happy New Year. From everyone here at Own Buffalo, from our houses to yours, have a safe and happy holiday season.